but lots more earnings. So let's welcome on board with Nitin, Rakesh, the CEO and MD at MphasiS, joining in on the show. We also have with us the CFO, Manish, Dugar, joining in. Nitin, if I could start off with you, good morning firstly. How's the demand environment on ground, and do you think momentum has derailed a bit because of geopolitics and inflation?
The industry being faced by everybody, and I guess everyone is trying to work with this situation to solve for it. For example, we are seeing clients open to and willing to have flexibility in the operations, offshoring, looking at fresher pyramid corrections, while they were not so much open earlier. And at the same time, there are discussions going on from a pricing perspective. We see customers willing to give us prices which will solve for paying out some of these increments. At an overall level, it's a typical demand supply situation, and we believe that the market has its ways of correcting it. These are headwinds which are short term in nature in our mind, and we should be able to manage our profitability, at least the way we think of it in the current year.
Right. Okay. Also, Nitin, TCV pipeline has been strong, yet again close to about $350 million. Could you help us understand the mix? And is this coming from large deals or smaller ones?
I think we've seen a pretty consistent uptick in our number of large deals, as well as the average size of large deal, per large deal. So if you look at the average size, is almost double of what it was 2 years ago. And this year we've sold 28% more TCV on a net new basis for the full year compared to last year. So I think while the deal wins number for a quarter can be lumpy because one large deal can sway that number. What's important is the lead indicator of the pipeline. I think at this point in time, the pipeline is still very healthy, despite record conversion in the last 12 months. And if you look at the origination of new deals, that momentum is fairly steady. So as long as we are able to originate new deals, bring them in the pipe, and then keep converting the pipe like we have been doing consistently for the last 7-8 quarters, I think we'll be fairly okay in terms of demands, and that's kind of the focus for us as well going forward.
Nitin, so which industries and geographies are driving growth? Any impact of geopolitics and client spend in Europe?
I think at this point in time, at least if you look at Q4 or full year FY22 numbers for us, the growth is actually very broad based. All verticals have grown. In fact, 4 out of our 5 verticals have grown over 30% YOY in organic terms for the year. All geographies have grown. Europe has grown at about 25%. Even in Q4, Europe grew over 20%. Given just the business that we have modeled around going to market by named accounts, that's a little bit of a high touch model, and that's kind of helping us despite some of these concerns that everyone's talked about. We don't really have any exposure to Eastern Europe, either from a client perspective nor from a supply chain perspective, so that hasn't really shown up in our commentary or our numbers. And I think that at this point in time, it doesn't look like it is impacting demand even in Western Europe to that extent. So I think the broad basing of growth from a client segment perspective, vertical perspective, geography perspective is something that we are very heartened by, because that gives us a little bit more room to continue to drive that kind of growth.
So Manish, how's Blink acquisition scaling up? What is the contribution this quarter? Any more acquisitions which are lined up?
M&A has been a very key part of our ability to build competency and scale up the tribes and squad model that we have been talking about, given we are primarily a tech-led company. Blink was the recent acquisition, and it has certainly done much better than what we had thought, even optimistically, both in terms of on a standalone basis, what we expected them to deliver, which was their aggressive plan, and including synergies that we are able to drive across many of our clients. And it's very heartening to see that in the couple of quarters that we have been working with that team, already there are significant number of deals that are opening up from a pure Blink services perspective, and also the incremental TAM that it is opening up in terms of conversations that we are having with the customers where we already have a significant revenue, and now it opens up an opportunity for even significantly increasing that going forward. In terms of new M&As, clearly we are always in the process of evaluating complementary companies which can add to our competence. And the reason why we have been also making sure that there is enough cash in the books is to make sure that when that opportunity comes, we are able to capitalize on it.
Okay, so that's the likely inorganic growth strategy going forward. And Manish, before we let you go, can you give us any update on the guidance for the new financial year?
We have, we typically talk about what we expect in the year when we begin the year, and this is the earnings when we talk about what we expect in the year 2023. Clearly, given the demand environment and the TCV wins and the pipeline, like Nitin mentioned, we are reasonably confident that what we have been able to do over the last 2 years, which is deliver industry-leading growth in the direct business, we should be able to continue doing that. And as DXC becomes a smaller and smaller part of the overall portfolio, the impact of that in terms of dilution to our growth rate becomes lesser and lesser. And hence, even at an overall company level, the growth should start looking much better. If not industry leading, for sure top quartile.
If not,
Okay, so that's any update as far as guidance goes for MphasiS. That stock higher by over 1% in trade at the moment. Thank you so much for joining us live today and decoding the earnings right here on this edition of the market. And it's that time of the show where we get you a new segment.